Welcome back. We're with Dave Burrows. All right, let's get back to the phones. Dave, Don in Centreville Mountain, Nova Scotia. Don, that sounds gorgeous.
Yes, it is very, very pretty up here.
Wow.
I'm just wondering what you think of tourmaline oil. It's at about $12.50 or so, and it's. I was listening to your show last week when somebody recommended that it might be a buy at under $13. So I'll hang up and listen. Thank you very much.
All right, let's find out. Thank you, Don.
So, Don, everybody comes at things in a different way. In my world, first question is, do we like the asset class and we're bullish on equities?
Yeah.
Second, do we like the sector? And
What's
I have to
the
be honest that
answer?
this group continues to be weak, and buying weakness in a strong market is not, I think, the right thing to do. Okay? So you could buy the best company on earth. If it's in a sector nobody cares about, it's really hard to make money. And I don't need to be the first one to be the buyer. So if I look at, for instance, the XOP, which is the Energy Producers ETF in the US, it's basically trading on the lows and at a relative low versus the market. So there's no uptick, and we've got a giant tailwind in the market. Now, arguably, you understand, a lot less demand for energy coming out of China. Pricing is weak.
But there's also that ESG movement now, too, right?
ESG is a huge issue.
Yeah.
The third thing is, the reality is that if prices move higher, fracking turns on production immediately. So it's very hard to make a case for owning anything other than the absolute best of the best assets in energy. So if I had to own one thing, I probably would own Canadian Natural Resources or Suncor, because they've got reserves to forever, and they've spent the money. They're going to generate tons of cash flow. There's going to be great dividend growth. But even that's not performing well. So I think to just be very careful of buying a weak stock in a strong market and hoping that it's going to join the party. You only get markets like this from time to time. Make sure you own things that people care about now.
So no new money, obviously. What if you already have it? A lot of our viewers got stuck there.
I got to tell you, I would be moving on.
Switch horses?
We had a little bit of energy at the beginning of the year, thinking maybe through tax loss selling, you'd see a pickup in demand in this group. And there's just too many other things to do to sit with a position that is underperforming.
I was interviewing Premier Jason Kenney of Alberta last week here on BNN Bloomberg, and I asked him about that. Just, it's not a commentary on oil per se, and thankfully no one trolled me on Twitter, but I just asked him, you know, with the ESG movement, how precarious is that for you, your province, and the companies that operate there? And he kept saying that, look, the story is this, but if people don't want to hear that story, there's your problem, right?
So when I was on 6 months ago, I said, look, do a very simple comparison. Put up a chart that compares TAN, which is the solar ETF, to XOP, which is the energy producers. And they were going in opposite directions. And every time energy would pick up, the solar ETF would do even better. So alternative energy is coming. ESG is here. Big asset managers like BlackRock don't want to own energy. Do you really want to fight that? And I'm not saying it's right or wrong. It's just the way that it is.
Just the way that it is. All right, Dave. Excellent commentary, sir. Thank you for that. Let's get to Kevin now in Kingston. We'll switch over to Canadian Financials.
Hi. Thank you for taking my call.
Hey.
It's on the TD Bank.
Okay.
But David, I've been following you, and you're very bullish, and you have been bullish in the most difficult times, and I appreciate that, because sometimes things aren't going very well, and you come on the show and you're a breath of fresh air. So I really appreciate it. Because you're bullish, I want to ask you about the TD Bank. And would you step in at this price? But do you have ultimately, how long do you think this bull market will go for, which ultimately will affect the TD Bank and whatnot? Do you think we have another 2 years left to this bull market, or 3 years?
Okay.
Do you have a price target on the S&P 500, which would affect the TD Bank? What's your forecast overall? Because I know you're bullish. Thank you.
Great. Thank you, Kevin.
Okay, so I'm going to give you two time frames. First of all, cyclical bull markets tend to last 24 to 36 months between major corrections. And we cleared one at the beginning of 2019. So let's say we're a year into what is probably 30 to 36 months. So that's cyclical. But if you take the lens back, now for several years I've been talking about the fact I think we started a secular or structural bull market when in 2013 we cleared the highs from 2000. They tend to last 15 to 18 years with interruptions like 14, 15, like 2018. Now, if you think about it in terms of demographics, in 1981, the baby boom, the front end of the baby boom, hit peak investing years.
Yeah.
And it peaked out in 2000. And that was the end of a structural bull market. And they've been sort of in decline as accumulators of equity type assets since then. The millennial cohort is bigger than the baby boom cohort.
Really?
And they've just hit the same point the baby boomers hit in 1981. So that would argue a structural bull market could go on into the 2030s.
If they're buying equities.
Well, and they, listen, take a look at the news on how many Robinhood accounts have been opened in the last month and a half to buy alternative energy and Tesla. I'm not saying right or wrong, but they are coming and they're earning money. So I think that this can go on for a while. I do think we're going to have some really tough markets. In the 80s and 90s, you had a crash in 87. You had the 1990-91 recession. You had the 1998 Asian currency crisis. You have big problems, but they don't last a long time. And so I think that we have 2 years, 18 months to 2 years of pretty clear sailing in front of us with little interruptions, and that's good for financials. I also think we've been going through a generational low in long-term interest rates. That's also good for financials, right? So I happen to prefer some of the U.S. financials over the Canadian ones currently, because it's just exposure to the U.S. economy. TD Bank's going to be fine. I prefer like a JP Morgan or a Bank of America.
Okay, let's see if JP Morgan or one of the other Wall Street banks shows up in our program. Past picks, though, straight ahead with Dave Burrows. Stay tuned.